Welcome back to Market on Close. Dollars down, stocks are higher, so is gold and Bitcoin too. Let's talk with Scott Bauer, CEO of Prosper Trading Academy, who's been tracking gold with us here. Scott, we got a little bit of a bounce underway the last couple sessions. Seems like gold is firming right where you'd want it to on the chart to prevent it from going into a downtrend. What do you make of this bounce?
Yeah, I agree with that. And it's certainly, with the dollar trading the way it is, that's why we're, seeing a little bit of air behind the move up in gold. And you know that I have been a gold bull
yes,
for quite a while, Oliver. And I actually think right now that in the short run, it's coming up to a little bit of resistance here. Short run here. I think this run up through the election here, through what the Fed is going to talk about later this week, which is probably going to be a whole lot of nothing. I think this is an opportunity to actually sell a little bit of upside here. I don't see this momentum right here. I do see it still continuing through the end of the year. But right now, I think this little run up gives us an opportunity to trade that, sort of that upper end of that range.
Now, Scott, that range, let's talk about it here. Guys, if we can bring up GLD, I know Scott likes to trade the ETF. To me, just kind of spitball in the range, maybe 180 to the upside, 181. Obviously, the downside's been pretty well established around 175.
You got it.
Is that what you're looking at?
Absolutely, Oliver. So I'm looking to go out 1 week because I want to take into consideration what the Fed does later this week. And I'm actually selling an upside call spread, the 181, 183 call spread that expires next week. So that is, right in line with what you're talking about, the upper end of that range. I'm going to try selling that for about 70 cents or so. And again, I think that upper end of that range is so clearly defined. At some point, it's going to break out. I don't think it happens in the next week and a half.
Okay. So right now you're looking at selling gold of the November 13th contract, 181 to 183. So you've got a good, you can get a solid little bounce here. And
sure,
you can go all the way to 182. You got $4, basically a leeway.
No doubt about it. And I like to give myself a little bit of leeway above and below, those established ranges. And, I'm always going to trade a spread. So I know what my maximum risk is. I know I'm going to get stopped out in case we get, a major move here. Again, I think that the news coming out of the Fed is going to be more indicative of what gold does than whatever happens with the election over the next couple of days.
Okay. So let's talk about that here, Scott. It's the day of. And the numbers on the expectations continue to point toward a Biden victory. It's been that way for a while. Polls are there. Market odds are tighter, but still favor the former vice president. Right now, the narrative both on the sell side, from research that I read, from folks that come on the show, and just going from what the guy has told us in his campaign, that his party's ready to spend, right? And apparently that could be 2-3 trillion. Probably even more, maybe more. I don't know. What we know is a couple months when this whole talk was going on, the Democratic price tag was bigger. Is that to you going to be a gold bullish event then? How will you adjust this trade, or how will you think about gold and Bitcoin if that prediction comes true, Biden gets it? Is the market already geared up for all that? Is it already priced in, or are we going to blow out even further?
Well, that's why, Oliver, this trade is very, short term, only a week and a half, and why I said my bias to the upside to the end of the year is still there. Because if there is a Biden win, everything you just said is probably, by the book here, but nothing's going to happen right away. Nothing's going to happen this week, next week in terms of any of these big infrastructure spending, ideas. But as things start to unfold towards the end of the year, that's where things may pick up. And I think that is, possibly going to be a huge accelerant for gold.
Okay. All right. So if there's an accelerant for gold, does that extend to BTC? Because that's where investors have apparently been going lately, Scott, as we've been watching this breakout. A little bit of a dip overnight, bam, came in and bought it again.
So we've been talking about it, and we've specifically been talking about the correlation between, gold and Bitcoin to the dollar, weaker dollar, and, we've seen both of those asset classes really benefit from that. With Bitcoin, though, I'm going to go a different route right now, Oliver, and talk about a couple things. That the overall FOMO, not FOMO that we saw years ago, oh my God, I got to buy this is going to $1 million type thing, but the FOMO over the fact that this is now really starting to get traction, that it's going to be widely accepted. News coming out of PayPal and Square and even over in Europe, there's lots of news about adoption here. So there's almost a sense of reality here that this thing could really be here to stay and could be a currency. But more importantly, right now, there's a ton of shorts that had to cover. Ton of short positions that when Bitcoin jumped through 13,000, those positions had to cover. And new positions that came into the space are also short contracts. So they're covering as well. One other thing to watch here that I've been talking to some people who are, fairly well versed in this space. The large whale guys, okay, large institutions holding their Bitcoin on exchanges. A lot of them have removed them and taken them off the exchanges and put back into a cold wallet. What has that done? That has dried up supply. It is a very, very bullish sign. It has really dried up supply. And so, now you're getting institutional investors coming into the market. And over the last week or so, there's been larger purchases per transaction. So there's more purchases in the 2 to 5 Bitcoin, and this is notional, 2 to 5 Bitcoin range than almost ever before.
Wow.
So you've got this confluence of tailwinds here, almost irrespective of what the dollar is doing, that's really helping to keep the price of Bitcoin where it is.
Okay, I got to go back and process some of that cold wallet
I
stuff
know.
And the Bitcoin hodlers and the whales. But I hear what you're saying, because at the end of the day here, clearly, there's more demand than there was supply available. I mean, prices going up.
That's
for
what
BTC.
it is.
There's no real fundamentals here, really. I mean, you could tie it into macros, and some of that I get it. If there's expectations that dollar is going to get slammed again, if there's some big stimulus package. Look, it's been one of the few things working here. So I think some of that macro tie has been validated. And to your point here, look, it's the simplest way to explain it. Is more people want Bitcoin than was available. They had to pay up for it. Price is king, very much so, for the king of crypto.
Supply and demand.
Yeah.
The oldest economic principle there is. Supply and demand.
All right. Watching gold, BTC. Appreciate the conversation, Mr. Bauer,
Thank you,
CEO of Prosper Trading Academy. Thanks for the gold trade. Selling, call spread to the upside in GLD. When we come back.